Hello, it's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and a CFD brokerage. Be sure to check out the website and visit www.cfds.com. Also for educational material, you have www.cfds.education. Okay, let's have a review of the US markets now. Let's see where the potential direction is, given the fact that it's a FOMC day. Okay, so let's try and discuss this market and see exactly where we are. Okay, fundamentally speaking, first of all, let's see exactly how the markets have fared overnight. Okay, US markets last night, pretty impressive. Certainly pushed higher. I did explain that via the IHS formation, which I'll discuss very shortly. For now, we have the Nikkei up 1.4%, but the Shanghai down 2%. So contrasting ends. But having said that, that generally is bearish for the S&P 500 from my understanding. Although you do have the slant of the Nikkei, given the fact that the yen is lower, and that's kept the Nikkei higher as well. So a mixed picture there. But given the fact that the focus has been centrally and focused solely in China, that should be interpreted as a risk-off scenario. Okay, now let's try and decipher the US markets and see exactly where we stand. The economic data yesterday was relatively weak, especially the inflation number. Therefore, that's what triggered the rally, and also given the fact that the oil prices rallied as well, that certainly helped the US markets yesterday. And now, can that actually continue, given the fact that you have the uncertainty regarding a Fed rate hike? It's going to be very hard. Also, with regards to the credibility situation as well, Miss Yellen certainly has basically dug her own grave, because it's all about credibility. It's very hard for her to backtrack now, especially with China now stabilizing as well. I mean, if I just bring up the Asian indices, let's just see if I can bring up the Shanghai. Bear with me. Okay, so you've got a chart of the Shanghai, which is here. I drag this across, and you can see that it's basically consolidating in this region. We did obviously push higher, but the market obviously has fallen and given back everything from that perspective. Now, the weekly chart certainly still remains vulnerable. We have this bastion of support that markets are desperately trying to hold. Previous resistance equals support, so this is a key level at 400. If that cracks, then expect the Chinese markets to be pushed even lower, from my interpretation and understanding. If obviously the Fed hikes rates, and that certainly doesn't bode well for emerging markets, and that doesn't bode well for the Chinese export machine either. So it's going to be very, very interesting. Now, markets hate uncertainty, so whenever you have fear and uncertainty, that's generally considered to be negative. So therefore, it's a risk-off scenario from my understanding. Okay, now back to my FTSE 100, or should I say the S&P 500, the US indices. Okay, now first of all, I'd like to share a chart of the VIX. Let's see where the market is technically before we start even interpreting and trying putting fundamentals and piece them together, because at present there's so many counter arguments to a rate hike and non-rate hike and so on and so forth. My personal opinion is that they may well delay, but the overwhelming, or it may well even be a 0.125% rate hike, or it could be a rate hike today, and then obviously they are going to backtrack later on, and then obviously that way the credibility it remains intact, and obviously they always have the option of obviously reducing rates thereafter. So again, it's very problematic, but the most important thing really from my understanding is the uncertainty. The fear and uncertainty going into the decision, given the fact that the market has already short squeezed going into the decision, because to a large extent, because they may well be interpreting or anticipating a possible rate hike delay. That aspect has already been factored into the market as well. So if the Fed does hike rates, and obviously it's a risk-off scenario immediately. Okay, now, the most important, I think, very well, this current juncture is the VIX, and this is something that a lot of people are not actually paying heed to. Now, I did mention this VIX, and I mentioned the inverted head and shoulders formation on the S&P 500. So if I just show you the S&P 500, which I've been sharing for some time now, I did explain that this would be a right shoulder, and the market obviously would then obviously push higher, given the fact that there's talk about the Fed potentially delaying rates. And given the fact that the rhetoric started to roll out with regards to a no hike, okay, or a potential delay in the hike, then obviously that triggered the markets to create this right shoulder, and given the fact that China has stabilized as well, etc., etc., and the market started to push higher, given the fact that the sell-off was quite substantial from the outset. Now, going back to the actual VIX itself, I'll just bring this up for you. The VIX now is coming into gap fill support. So the daily chart is now coming into previous resistance equals support, and therefore the VIX is now looking to push higher from here. Now if the VIX pushes higher from here, then we all know what will happen to the S&P 500, which as we know is obviously bearish. Now the VIX will start to push higher from here. Why? Because of the uncertainty regarding the the Fed decision that's due out later today, and given the fact that the Fed has to hold its credibility, etc., etc., and the rhetoric there has been quite strong towards a rate hike, then we have to interpret as such. Okay, now that's one variable. The other variable again will be the commodity price. Oil has certainly rallied in the last few days. It certainly rallied quite stellarly yesterday as well, although it is now into resistance. Now it's bounced from $38 up to $48, and the Fed will certainly use that as an example that inflation certainly has started to pick up, because you've seen the oil price stabilize, etc., etc., and as we all know, commodity prices rising equals inflation. Okay, so therefore they have that backdrop too. Not only that, if I just share a chart of gold as well, so bear with me, just bring up a chart of gold. And a chart of copper as well, just to show you, and also the chart of one second. Go to commodities. CRBQ, that's it. Okay. Greenhaven is generally the better one as well. So let's just go to US indices again. Just need to add these in. One second. Okay. CRBQ, which is a global commodity ETF. Okay, so if I just add that in there as well. Okay, so we certainly have stabilized on the CRBQ. If I just go to a weekly chart as well, I mean, although one would argue on a weekly chart, we still remain bearish. So again, that's the argument that the Fed will hike rates basically. Okay, so the market hasn't, from the CRBQ or the commodities perspective, it hasn't made a lower low, and it certainly is holding thus far. So therefore, one must give it the benefit of the doubt. Let me just bring up the Greenhaven as well. Just give you that's the one, Greenhaven. Okay, so very similar. Okay, right. So looking at this straight away, one could spot a inverted head and shoulders formation. So you've got this left shoulder here, and then obviously right shoulder, the market would push higher. Now, based on the inverted head and shoulders pattern on this Greenhaven continuous commodity index, one would presume the Fed would delay the rate hike. Okay, Fed will delay the rate hike based on that chart. Based on the CRBQ, the Fed will obviously continue and maintain its hike in rates, or a rate hike. So it's up in the air from a technical perspective, nothing clear from there, although the VIX is certainly telling you and giving you a warning sign. Okay, copper chart itself has an inverted head and shoulders formation, and that was mainly due to the fact that the earthquake in Chile certainly sent this higher. Again, it is yet to be seen whether or not we can sustain a move higher on copper. Okay, global growth still is languishing, still is weak, and as you can see, we have built a wall on the copper, a chart of copper at this 2.46, 2.47 level, and therefore one would then presume, based on observing this chart, that the actual dollar will start to move higher, and therefore commodities obviously given the inverse relationship. Okay, the chart of gold as well has an inverted head and shoulders formation in the daily chart. Again, that is potentially signaling that there may well be a rate hike delay, therefore a weaker dollar, and that allows the price of gold to certainly start to move higher as well. Or alternatively, it could create fear, whether it's a geopolitical situation, okay, a socio-economic situation such as China, and that could also trigger gold as well. So gold is a double-edged sword, and again, there's a mixed picture with regards to commodities. But with regards to oil, you can clearly see that we are into resistance now, and that was mainly due to the geopolitical factors from North Korea to talk of Russia obviously having boots on the ground in Syria, and that obviously created the risk diaspora, or certainly increased the risk aspect, and obviously sent the price of oil higher as well. Okay, so commodities, certainly from my perspective overall, especially if you look at and observe copper, because copper is the doctor, and that is certainly showing you are into resistance. Okay, the VIX is actually showing that you're into support, which means that equity markets into resistance. Now let's start by observing the leaders. So let's look at the Dow Transports and see what the Dow Transports is signaling and directing us towards. Okay, so if I look at a weekly chart, first of all, Dow Transports, as we can see, we certainly remain within the downtrend, i.e. lower lows, lower highs, and the market certainly is going in one direction at present. There's nothing else that I can indicate based on this information. Okay, so weekly chart certainly remains bearish, lower lows and lower highs. Again, it's yet to be seen whether this double bottom will hold or this horizontal support will hold. Now if I go to the daily chart of the Dow Transports, again we have had a stellar bounce, certainly have pushed higher from this pivot low. We even pushed higher than previous support equals resistance, so very, very impressive from that juncture. Okay, from that perspective. Now I can't see anything overtly at present in terms of a diagonal trend line, but yes, horizontally we are into resistance on the actual Dow Jones Transportation, and therefore that would obviously indicate resistance on the US markets given the uncertainty. Now if I use the fib retracement, we are into that fib 75% resistance zone, and therefore you are looking at resistance for the short in the interim. Okay, on the actual Dow Transportation. Looking at the smaller time frame, 60-minute chart, we are pushing higher. We certainly have this previous support equals resistance zone here, and obviously previous support equals resistance zone there. Okay, now going to the next chart, which is a leader from my perspective, is the Russell. Let's see what the Russell has to tell us with regards to the actual market itself. And the Russell, you can see here, daily chart certainly is into diagonal trendline resistance. Weekly chart, given the fact that we held this diagonal trend line, we're retesting that broken trend line now. So therefore you are looking at a bearish slant. Daily chart, again, like I said, is into resistance. 60-minute chart, again, is into resistance. We are into this diagonal trendline resistance, although we do have the inverted head and shoulders formation. But given the uncertainty going into the Fed decision, it's going to be very, very hard for the markets to maintain or sustain any real move higher from my perspective. And we are into that double diagonal trendline resistance as well on the Russell. So therefore, my perspective, my understanding is the S&P and the Dow are signaling resistance. Now if I look at the S&P 500 now, again we are into the 200 MA. Yes, we do have this inverted head and shoulders pattern, but again it's all dependent upon the Fed decision. As you can see here, we have negated the weekly bearish candle, so that's certainly from a technical perspective, yes, it is a bullish signal, but again that is dependent on the Fed. If the Fed obviously decides that it wants to hike rates, then you'll see that will certainly be negated. Well, we will see a bearish engulfing candle, and the market will sustain itself on the downside. So yet to be seen whether or not we actually have held this diagonal trend line, and whether we're going to build a base and start to thrust and push higher. Okay, that certainly seems a situation at present. Okay, the daily chart of the S&P 500, again, yes, we have broken out this symmetrical wedge pattern. So initially one would presume, just looking at a technical basis, that the S&P 500 certainly is bullish. 60-minute chart of the S&P 500, like I showed you, you are into that horizontal resistance and 200 MA. Given the uncertainty, etc., I cannot, with conviction, obviously slant towards the bullish side. I have to go towards the bearish side for now, okay, and then remain in the bearish camp. The 10-minute chart on the S&P 500, again, we have this expanding wedge type pattern, therefore indicating exhaustion and bearishness. And we'll see exactly when the market retouches this 1980 level, which is the next bastion of support, and 1986 as well. Okay, but again, be aware of that inverted head and shoulders formation, and that pattern will continue if the Fed potentially delays a rate hike or has any type of dovish stance. Okay, that's the S&P 500 for you. Now the Dow Jones, again, we are back into horizontal resistance on the Dow. Using a Fibonacci retracement, our pivot move from here, pivot low, pivot high, we're into that 61% fib resistance on the Dow itself. 60-minute chart, we are into that 200 MA, and it is indicating resistance for now, given the uncertainty regarding the Fed decision. Okay. The next move we're looking at for now is going to be the next instrument or a variable that we look at is the actual IWN. That's something that I observe as well, so I'll certainly add that in there. Okay, which is like a small cap version of the actual Russell. Okay, so, and again you can see diagonal trendline resistance, confirmed resistance, 60-minute chart again into resistance as well. Okay, so that certainly is indicating weakness as well for now, given the fact that we are into that uncertainty phase. Okay, the next indices I want you to observe is the actual Wilshire 5000, which is overall it's a more collective view of the US markets and gives you a better view in terms of support, resistance, and the ability to gauge risk. Now, yes, we have pushed higher, which is very impressive, but yet this all hinges upon the FOMC. Okay, so again, it's very subjective at present. Okay, from a Fibonacci perspective, if we take the pivot high to the pivot low, you are into that 50 to 61% resistance, and given the fact that the market has made a lower low and we are looking at a lower high, again the uncertainty remains the key. Okay, if there was no uncertainty and we knew the certainty of the outcome of the FOMC, then I'll be able to reanalyze and then I'll come to a conclusion. Okay, now looking at the actual biotech sector, again you are looking at potential resistance, although you have moved away from the actual downtrend diagonal trend line, and we are back into that fib 75% resistance, where previous support equals resistance. So again, we are into key resistance for the actual biotech sector. Now the semiconductors, again, another interpretation or another observance of the actual biotech sector. If I just look at the previous support equals resistance, we're back into that zone again from the market's perspective. Diagonal trend lines, I can connect them to cross, and again we are into resistance from that perspective too. Okay, so again you are looking at potential resistance for the semiconductors as well. Okay, now the Nasdaq itself, let's observe the Nasdaq. The Nasdaq is into gap fill resistance. Now, given the fact that Nasdaq's into gap fill resistance, there is another gap that's available above, and obviously if the Fed delays or any type of hawkishness, then that gap certainly comes into play. But for now, as a trader, you have an unfilled gap below at 4180, and that certainly seems to be open, especially given the fact that the Shanghai was obviously negative overnight, and that's certainly interpreted as being a risk-off scenario. Okay, so although having said that, the counter argument is that the Nikkei was up by 1.4%. So again, we have to discuss and interpret that as accordingly. Okay. So the Nasdaq certainly is into resistance as well. So for my understanding and my interpretation thus far, looking at all the indices, looking at obviously the market itself, the only one variable actually that we do need to look at before I move on and create any type of summation is going to be the dollar index. And as you can see here, we have pulled back on the dollar. Okay, now I think the most important chart or important point to notice here on the dollar index, and this is one pattern that I've certainly observed thus far, is this inverted head and shoulders pattern. Okay, so again, this is a continuation pattern, and therefore we have pushed lower, we've pushed higher, and now we're going to potentially push higher again and test the highs, given the fact that the Fed has to maintain its credibility. Okay, so again, don't be surprised if you see a spike in the dollar itself. Okay, from my understanding and my interpretation, because it's all about maintaining credibility. for the Federal Reserve for now, and especially Miss Yellen, because then she loses any potential goodwill that she's garnered thus far. Okay, but again, the economic data as of late has been very weak. But China has stabilized, so we can't use that as an excuse. Greece has stabilized, we can't use that as an excuse. So from her perspective, she can certainly go ahead with one rate hike, and then she can obviously pull back on the next. So it's going to be interesting. Let's just say that the chart of the Euro USD is telling us something else, but again, that certainly is a concern from my understanding, especially with regards to the ECB remaining dovish. So again, that's another factor that we need to consider now. The one other variable that I haven't observed is the USD/JPY, which I think is very important if you are trading the US markets, because it tends to move in tandem with that. Okay, and ever since we made this base, okay, the USD/JPY certainly has started to thrust higher. The one confusion that I can't understand is why the Nikkei was certainly higher overnight. Again, that's debatable. There's many fundamental reasons for that, but from a daily chart perspective, the USD/JPY certainly wants to push higher up to 122, which again, given the fact that the US markets are very sensitive to the movements in the Nikkei, again, that's going to be interesting as well. So if the USD/JPY starts to push higher versus the Japanese yen, again, we'll see exactly how US markets react to that as well. Okay, so that's basically where we stand from the dollar's perspective, and that certainly is how I'm interpreting the US markets as such. Again, any type of dovish stance or dovish rhetoric or any attempt at playing down a rate hike will certainly send the S&P 500 screaming higher, based on the inverted head and shoulders pattern, which I've certainly demonstrated to you on the S&P 500. So if I was to bring that up for you, given the fact that we already have broken out, daily chart would certainly push higher. Weekly chart would indicate to you an outside bar, given the fact that the red candle's been negated, and the 60-minute chart would continue towards its target of around 2080. Okay, but again, one must contemplate China too. We can't ignore China, so it's very important that we keep China in mind and see exactly what happens with regards to the Chinese markets. Okay, and again, it's all about central banks dictating the next move in this market. Hope that's been a good insight for you in terms of understanding the US markets and the position that they're in at present. Be sure to visit www.cfds.com for your trading obviously requirements. They are a leading provider of spread betting and CFD trading. Okay, and also the educational website as well, where I post my latest charts, my analysis, my YouTube videos, etc. at www.cfds.education. From Adil Fazal, market analyst at cfds.com. Goodbye, safe trading, and certainly adhere to good risk and money management later on today. Goodbye.